Good morning. Welcome to NBC Markets Pre-Market Pulse, 24th of June 2025. Headline for this morning's report is stock spike higher as Trump describes the Iranian response as weak. Now, that response was to throw 14 missiles or launch 14 missiles at a US base in Qatar. Very few of them got through. There was very few casualties and no deaths. So essentially, we've seen traffic in the Strait of Hormuz still fairly fluid, ships going in and out. So Trump's probably fairly correct in saying that response was pretty weak. That gave equity markets quite a buoyant mood. As you can see there, the Dow, the S&P, the Nasdaq, and the small caps index, the Russell, up around 1% each. Pretty surprising response, really. Obviously, this happened early in the morning our time, or 1 p.m. Eastern time in the US. Obviously, the Euro stocks and the Asian markets there on the left were closed at the time. Red 7 headed higher. The chip stocks also heading a little bit higher. We saw Tesla probably one of the better performers on the day, up 8%. It's been very volatile in Tesla recently. But we've seen a little bit of a bid tone come back in there. The only red spots on the screen, obviously, are the oil companies. Exxon, Chevron, down around about 2.5% there. You can see on the middle right-hand side. Now, this is because, as you can see, the big down bar there from crude down 9%. So obviously we had a lot of buying early in the session, but the price action was fairly weak considering we had, the Strait of Hormuz does basically see 25 to 20%, 25% natural gas and 20% of the global oil traffic through that region. And the Iranians do have some influence over that. They have no legal grounds to be closing it, but they use proxies like the Houthis in the Red Sea, and they can obviously attack ships, so people were worried about safety. Platinum's still on a decent run there, up about 4% for the week, but recovered. Copper as well, silver slightly higher, gold obviously down just a little bit there. And Bitcoin started to recover as well. So a little bit more risk on attitude across the board, which is probably fair enough considering how much they thought the potential response could be from Iran overall. On the economic front, we also had another Fed member, in addition to Christopher Waller on the weekend, Michelle Bowman, indicating that rate cuts might be on the table in the US. I find that pretty surprising, considering obviously we've got the deadlines coming up for Trump and the Liberation Day tariffs, which he put on pause until July the 9th, which is only 15 days away. And obviously energy prices being considerably higher over the course of the last month, probably still up around about 11% for the month. But for around about 18% where they were yesterday, that adds about 0.3 to CPI in the US. So we, obviously we can't be cutting rates into an inflationary environment, I wouldn't have thought. So Fed Chair Powell testifies to the Senate and to the House committees on Wednesday and Thursday nights. That will be the real deal. There won't be any jawboning. For those who don't know what jawboning is just, talking is one way that they basically, talk about a monetary policy to try and get an effect from the Fed instead of having to move policy, which is a tactic they had to use when they had zero interest rates back in the 2010s or 2010s. So as far as Australia goes, we've got Australian CPI tomorrow. There's an inflation number for the US on Friday. We've got FedEx reporting, also Carnival Cruise Lines and Nike towards the end of the week. It really does wrap up. We're talking about the scraps here now in terms of the reporting season. We'll start to see the banks probably midway through midway through next month as earnings season heats up again. So look, today I would expect to be very quiet. We'll probably get a bounce here in Australia. There will be one eye on there's the Chinese Congress or the Standing Committee of the 14th National People's Congress. That's going to go through till June 27. It's a lot about Chinese policy. We'll see if there's any chest beating there leading into negotiations and deadlines around Trump's tariffs on July the 9th. I would expect if this situation is solved fairly quickly, Trump has only really got about 15 days to do about 98 trade deals. Currently, there's only 2 being done, and those 2 were fairly desperate. So I would expect over the next sort of 14 odd days that Trump very much starts to making those threats again and trying to get some people to the table, which won't be that great for markets, but probably not for the rest of this week. He's probably going to try and handle one thing at a time. And the big, beautiful bill, obviously, which is the nicest possible description for wealth distribution to the rich. Look, it's still not through Congress as it stands at the moment. It's got to get done before the 4th of July because all of the congressmen and senators go on holidays. So there are a few things to be done still, but very surprised at the buoyancy of this market here at this stage. And I would expect there to be very little follow through here. So good luck trading today or investing today. I would say, high levels of cash are still appropriate until we get through this Liberation Day. But have a nice day.
General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.